$100 to $500 disappears from your Robinhood account every year, and the SEC filings just proved why. You believe Robinhood is the free trading app. That belief is about to cost you money. But before we dive in, let me ask you, are you aware of the hidden fees that Robinhood charges its users? If not, you're not alone. In fact, a recent survey showed that over 70% of Robinhood users have no idea how the platform generates its revenue. Here's the reality. According to Robinhood's S1 IPO filing, the platform generates revenue through multiple fee channels: payment for order flow, premium subscription tiers, and margin interest, all of which directly reduce your investment returns by 1-5% annually. For a single W-2 worker with a $10,000 portfolio, that's $100 to $500 per year vanishing silently. Most traders never calculate it. But what if I told you that these fees can add up to over $1,000 per year for traders with larger portfolios? That's right. If you have a $50,000 portfolio, you could be losing up to $2,500 per year. Stay with me. In the next 5 minutes, I'll show you exactly where those fees hide, why the IPO timing matters for your investment strategy right now, and what changes post-IPO for your account. You might be wondering, why should I care about Robinhood's IPO? Well, let me tell you, the IPO is a game changer for Robinhood users. With the platform's valuation expected to reach over $30 billion, the pressure to generate revenue will only increase, and that means more fees for you. Let's start with the first hidden cost: payment for order flow. When you place a trade on Robinhood, you think you're executing directly to the stock exchange. You're not. Robinhood routes your order to market makers, firms like Citadel Securities and Verdue Financial, who pay Robinhood 1 to 5 cents per share for the privilege. SEC data shows these arrangements generated over $800 million in annual revenue for Robinhood in 2023. Per share, that's invisible. But compounding the fees over time, the numbers add up. In fact, if you trade 100 shares per month, you could be losing up to $60 per year just from payment for order flow. But that's not all. Robinhood also generates revenue through premium subscription tiers. The platform's premium tier, Robinhood Gold, costs $5 per month and offers features like margin trading and research reports. While the fee may seem small, it can add up over time. And if you're not using the features, you're essentially throwing away $60 per year. But what if I told you that there are other platforms that offer similar features for a fraction of the cost? That's right. You could be saving up to $50 per year by switching to a different platform. Now let's talk about margin interest. When you trade on margin, you're essentially borrowing money from Robinhood to buy stocks. And just like any loan, you'll need to pay interest on that borrowed money. The interest rates can range from 5% to 10% per year, depending on the size of your portfolio. So, if you have a $10,000 portfolio and you're trading on margin, you could be paying up to $1,000 per year in interest. That's right, the fees can add up quickly. But here's the thing, these fees are not just limited to Robinhood. Other trading platforms like Fidelity and Charles Schwab also charge similar fees. However, the key difference is that these platforms are more transparent about their fees. They clearly disclose the fees on their websites and in their marketing materials. Robinhood, on the other hand, has been criticized for its lack of transparency. The platform has been accused of hiding its fees in complex language and fine print. So, what can you do to avoid these fees? First, you need to understand how Robinhood generates its revenue. Once you know where the fees are hiding, you can start to make changes to your investment strategy. For example, you could start trading less frequently or avoiding margin trading altogether. You could also consider switching to a different platform that offers more transparent pricing. The key is to be aware of the fees and to make informed decisions about your investments. Before we wrap up, let's talk about one more thing: the impact of the IPO on Robinhood's business model. With the platform's valuation expected to reach over $30 billion, the pressure to generate revenue will only increase, and that means more fees for you. But what if I told you that there's a way to avoid these fees? That's right. By being aware of the fees and making informed decisions, you can save up to $1,000 per year. So, stay tuned for our next video, where we'll show you exactly how to avoid these fees and maximize your investment returns.